One of the biggest questions that I get asked with my fans, or which I can call my friends, is how do you use the moving average correctly to make better trades? So in this video, I will show you a strategy that you can use with moving averages to make money in the forex market. So this strategy works very well on 1 hour time frame, 15-minute time frame, 5-minute time frame, or even on the 4-hour time frame. And the indicator that we are going to be using is the 50 EMA. So the 50 EMA is the 50 period moving average, and the moving average is a simple technical analysis tool which smooth out price data by creating constantly updated average prices. So the market, when it's moving, it's always moving up and down, up and down, up and down, but the moving average just give you the average direction of the price at that given time. So there are different strategies that you can use and combine it with moving average to make a better trades. So let me show you that strategy right now. So first of all, I want to answer the question, why moving averages? Why do we use moving averages? So we use moving averages for different purposes and different reasons. The first one is to identify market direction. So we know that when the price is below the moving average, the market is in a downtrend, and when the market goes above the moving average, the market is now going in an uptrend. And sometimes when the market is moving up and when the moving average is moving in the middle of the prices, that simply shows that we are in a ranging market. So that is going to help you if you want to place your trades as a trend following trades. You can wait for the market to go either up or below the moving average, and then if you want to scalp, you can go to a market which is going up and above the moving average, right? So it depends on your strategy, but in this video I will show you a simple strategy which is a trend following strategy that you can use, and then using the moving average. So the number 2 reason why we use the moving average is the moving average can act up as a level of support or resistance. So you will see sometimes when the market moves into the moving average, it tends to bounce on the moving average. As you can see right here, the market, when it moves into the moving average, it tends to bounce on that moving average, so that the moving average sometimes it acts up as a level of support or resistance, right? So the moving average can also show you signs of possible reversals, right? So when you see the market was below the moving average right here, and then here the market have turned into an uptrend, now the market is above the moving average, so this was showing you a trend reversal in the market. So you can use moving average to get trend following trades and also trend reversal trades, and also you can use the moving average for stop losses, right? So let's say we were entering our trades at this point right here. We were entering our trades at this point after the breakout of this candle right here. So we were buying at this point right here. So we would place our stop loss below the moving average, knowing that if the market goes below the moving average, it's now a possible sign of a reversal. So you don't want to be in that trade, because if the reversal happens, you will lose money. So you want to get out of the market as soon as the market crosses below the moving average. So now let me show you a simple strategy that you can use with the moving average. So first of all, before I show you the strategy, there's one thing that I want you to understand here. So our goal with this strategy is to place a trade when the market is closer to the 50 period moving average. So this is the 50 period moving average right here. So you can see period 50, and then we can change, let's just make it a little bit thicker so that you can see it very clearly. So as you can see, this is the 50 period moving average that is right here, which we are going to be using for our trades. Going to be using price action and also the moving average. So we want to see the market which is moving below the 50 period moving average. So let me grab my drawing tool here. So from here we can see that the market was moving below the 50 period moving average. So in this case we are only looking to sell. So the market makes this move and makes a pullback, and then makes another move here and break past this zone right here. So when the market breaks past this zone right here, we are now knowing that this downtrend is continuing, and now we are looking for the market to move back into this zone here, and then nearer to this zone here we need to see the market reversing closer to the 50 period moving average. So in this case here, what happened is the market breaks past this zone right here, right? As you can see, the market moves okay, the market moves into this zone, pull back, breaks past this zone, now back into this zone. At this point right here, that's where you were starting to place a sell order. So when you start seeing the market moving into that zone right here, that's when you start looking to sell at this point right here. The reason why you sell at this point right here is because you can put your stop loss above the 50 period moving average and have confidence that if the market goes into this zone right here, right? So let me do this. If the market goes into this zone right here and goes up to this zone, then your stop loss should be hit, because the market will likely go to the upside right then. So now in this case, you were selling here and then the market would move down and you would make profits. So the way you exit this market, there's two ways, right? You can keep going until the market comes and touch the 50 period moving average again. So if you had entered at this point right here and then the market is moving down, you are waiting for any time when the market touches the moving average to exit. But I don't really recommend you to do that. If you have patience, you can do that. If you have much patience, you can do that. But sometimes what will happen is the market can come down up to this zone and then come back up real fast, and it will take you out very close to your entry. So the best way right here is to just put your risk to reward. So if you risk, let's say $4 at this point right here on a small account, of course you would looking to get $10 or more. But if you have a big account, let's say you risk $50 here, so here you will be looking to take like $100 or $95 or $120, just like more than 1-to-1 risk to reward ratio. But first you need to see the market below the moving average, makes a push down, break of structure, which is this red thing here, which is our structure, and then market moves back into that zone right here. So let me show you another example. What happened right here is the market was still moving down, so we were always marking this zone, hoping that the market will come back into this zone. And then here we have this zone here, the market moves down, pulls back, breaks lower. This break is not real big, so I wouldn't trust that. So I would trust this break here, and then the market comes back into that same zone right here, and at this point right here, this is where you will be looking to sell. So I will mark here to create this structure for you, and then you can see that the market comes back into this structure and you were selling at this point right here, putting your stop loss above the 50 period moving average, because that's the measure of the trend. And then we can see that later on the market started moving, maybe it moved going down. As you can see, this is exactly what happened. The market goes down to this point right here. So of course these are only examples, but if you can see this in real time, then chances of you making money are going to be high. Now in this case right here, where the market is right now today as I'm recording this video, we are looking for the market to come back into this zone right here. So when the market comes back into this zone, I'm hoping that if the market comes back into this zone, they will meet up with the 50 period moving average at some point right here, and this is where you'll be looking to buy at this point, and then you put your stop loss here, and then you take profits here. So expecting the prices to bounce on its previous level of structure. So the key point here is the previous level of structure, and then the moving average supporting your trend. So let me show you one or two more examples so that you can really master this. So before we move forward, I want to show you one thing right here. So if you are trading this strategy, you want to avoid trading when the market is ranging like this right here. So if the market is moving up and below of the moving average like this, do not trade this, because this is a trend following strategy, right? You only want to start trading when you start seeing the market creating lower highs and higher highs, going to the downside. Now it's not going up and above of the moving average. So in this case right here, when you saw this happening, this was the move right here, the reversal, this uptrend, and then you mark this level. Now you see the market coming back into this zone right here. So this is where you will start selling, and then you put your stop loss above the moving average. So you need to practice this so that you can be able to see this in real time. So most people, they can see this as I'm demonstrating right here, but when the market starts doing this exact same thing in real time, you might find it difficult for you to get into the trades, right? So you have to have the patience to just wait for the market. If the market is ranging, do not force yourself to get into trades. That's where most traders get it wrong. As you can see at this point right here, you could have gotten 4 winning trades in one day. So this 1 point here, a winning trade, this 1 point here, another winning trade, at this 1 point here, another winning trade, and possibly at this point right here, another winning trade again. As you can see, another winning trade, another winning trade. But you have to have patience to wait for days like this. When you see the market just ranging like this, just do not trade this market. Maybe you can switch to another strategy, but do not force yourself to be placing trades in a market which is ranging like this. And the reason why I'm saying it's ranging is because the moving average is moving, the prices are moving up and below of the moving average. That's why I always tell you in the Telegram channel that patience is the key for you to make money. If you don't have patience, just jump in and out of the market at any point, chances are all your trades are going to be hitting your stop losses. So if you want to join our Telegram group and learn more, I will leave the link in the description. Just go there and join our Telegram channel for free. But before you go, guys, do me a favor, make sure you like this video and tell me in the comments, have you ever used the moving average in your trading? Tell me in the comments, and I'll see you in the next one.